4014.2 and 4029 even. Okay, so our attention goes back to that candle at 850. Okay, so regardless of whether you're following along on US 500 for the CFD traders that can't trade the US futures market or don't have real-time data, the same thing applies. The time candle on 5-minute basis. So your chart should be at interval of 5 minutes per candle. And the 850 time candle. Okay, that candle is the fair value gap. The candle prior to it at 845 time-wise, that high comes in at 3997.25. We do not want to see that level breached. And we don't want to see it go down below that. If it does, that changes everything and it puts us on standby mode and non-mode to expect it to show willingness to want to go lower after that. Can it dip into the low of the candle formed at 855 in time? Yes, it can do that and still go higher. That's not a problem. It's just preferred that we do not see that. And right about now, if you were in a trade, you'd be thanking yourself for taking partials, because there's a lot of clowns out there that'll tell you partials are stupid. Partials is how you get paid. Until you collapse your profitable trade in some capacity, whether it be part of it, half of it, or all of it, a trade open with profits is not profitable until you realize the gain. Actually, that means you have to close it. So listening to people that talk like that is nonsensical. And the whole point of you doing this is to make money. And if you can't make money and bank something, what are you doing? The levels I gave out earlier were just, just the experience factor, because it's too hard of a read right now. There's nothing logical to base anything on, because it's just a choppy little range that hasn't been productive in many ways, haven't done much at all. It caused harm to anyone that was long already, though. So theoretically, you would have 2 partials in the bank today, and your stop loss would be essentially at the opening price on the 850 candle. So if it trades at that point, we would call that a stop out on the bounce. And you would just move to the sidelines and wait for a new setup. Or do nothing because you've made something and it's CPI. Not that you're trading CPI. I'm not saying that this is you should be trading it. I'm just saying from an experience point, like right there, what it's just done, that dipping below the low of the 855 candle, if it's going to go higher, it shouldn't go much lower than it is right now, and it should start to go higher from here. If it breaks the low of the fair value gap, which is the very high of your candle at 845, near-term bullishness for me would be moved to the sidelines. I would move neutral. So I wouldn't be bullish or bearish. I would be watching how we trade below the low of the candle's high at 845. I just realized something. I'm not sure if I took this off mute. Looks like it's still going. Can you do me a favor and tweet to me if you can hear me? Can you hear me? Thank you, Buddha. Thank you, Jake. You're welcome. All right, so we're not quite in the middle of that fair value gap that's formed on the 5-minute chart based on the 850 candle. About halfway through that, that's consequent encroachment. I would not want to see that breached. It can go just a little bit deeper, preferably it shouldn't, but I'd like to see it turn from here and start to build more bullish candles and then try to run through the high formed on the 9 o'clock candle. We still got more than 15 minutes or so before the opening bell at 9:30. So a lot of things can change and shift and gyrate between now and then. And what small, little, modest study-based bias I have here can unravel quickly. So I want you on your 5-minute chart, whether you're using the US 500 to follow along or if you're using the ES live, grab your rectangle tool and take it up to a point at which where it says 4015 even, or just find any location on your chart and then drag it down to the equivalent of 5 handles. And I want you to think about how that is it. That's the range of what you're trying to accomplish. As a starting point, as a low hanging fruit, first rung objective as a student of mine, you're looking for just that. And look how much we've moved around already so far on a day that's very difficult to read. Very, very difficult to read. And you've been witness to me walking through and we're hitting the bottom of that fair value gap now. So you want to watch and see, does it support it or does it just rip right through it and show no respect? Be mindful you should have a line segment drawn from the 850 candles opening price, that being 3993.75. That would be the hypothetical stop loss. That would be break even for me with 2 partials banked. And then if it hits that level, then we would be neutral. We would go to the side and wait. Now, if this was Forex, you'd already be stopped out. This is the way it is. It's wild in that because you're trading in your broker's liquidity pool. No, you're not ICT. You don't know what you're talking about. Mm-hmm. And stopped. Okay. So now log that, screenshot that. Okay. So you've seen a run that offered an opportunity to move from a low of 39.92 and a half all the way up to a high of 40.21 and a half. Okay, so look at the range I told you to draw out with a rectangle. Is 5 handles, 5 points. Okay, so that would be like drawing from on your ES chart would be 40, 15, 4015. Drag the rectangle down to 400. I'm sorry, 4010. So it's 5 handles. Okay, that small little box, that's what your eye's looking for fluctuations to capitalize on. That's it. That's the smallest threshold objective that you need to concern yourself with if you're brand new. Because those 5 handles, if you're trading with one mini, that's $250. Some of you probably listening aren't even making $250 a day. But that one movement, that can change your whole life because that's the first building block of being able to be consistently profitable, finding something that repeats over and over and over again. Okay, so prices going down into the candle at 840 that we outlined as our initial ideal order block. Can you see how it's moved away from that fair value gap after touching the bottom of it? On the present candle we're in right now, it traded right back up from its opening, bumped the low of the fair value gap, and then expanded down lower. See, that's a signature that would, as I was stopped out, if I watched that occur, I would feel better about the idea that I got stopped out instead of just thinking like a typical trader would be, oh, I got stopped out and be frustrated. I'd be thankful that the stop did its job. I paid that stop, hypothetically, to do its job to prevent me from losing more. And it's a paradigm shift that you're going to have as a trader because right now, if you're new, you're thinking, I don't want to use a stop loss because that guarantees I'm going to take a loss. When a professional mindset is, I am going to lose, it's going to happen. So I have to limit that loss responsibly. And I have to have a mechanism, a shield in my repertoire that protects me from having excessive loss. And it's difficult to you grasp that when you're new because the first priority for you is I want to lose money. Well, that's answered rather quickly and easily by just simply not trading before you know how to trade. So you won't need to worry about the stop loss yet because you haven't even learned how to trade or read price yet. So you're placing so much concern and fear and anxiety on an element of the essential factors of consistently profitable trading, which is money management and risk management and the implementation of a stop loss. That goes without saying that that's important, but it's not important for you right now because you have to be able to know what the market's doing before you put a trade on. Can you really read what price is doing? So far, we've respected the opening price on that order block at 840, and we're back into the low of the fair value gap that was formed on the candle at 850. Still on a 5-minute chart on ES. Nothing terrible here yet. Nothing, nothing that exciting, but let's just say we were not in CPI conditions. I would already be going long and looking for a run above the relative equal highs at 40.20, just based on this. Because I would view, I'm not saying don't take that as a trade, okay, but I would, in other instances, I would view that as such, because I would view the 830 drop down as a Judas swing to get people offside, trap them thinking it's going to go lower, and upset all the liquidity below the lows. If you scroll back on your chart, whether it be on the 15 or if you want to go up to a higher time frame, 5-minute or 15-minute chart, to the left, you can see that drop down at 830. Whether you're using US 500 or ES Live, it cleared up all the sell stops that were trailed below recent advancements into the 4018 before the 830 news came out. So I view that drop at 830 as a fake move, and then the retracement down into that 840 candle being a bullish order block. And then I would watch and see, does it have the energy to go through that fair value gap formed at the 910 level? Okay, so your 910 time candle on the 5-minute chart, that's a fair value gap. But I'm not going to annotate that. I'm using the same rectangle that's on the fair value gap that I outlined and talked you through at 850's candle. I know some of you that are brand new, you're completely lost right now. That's okay. Trust me, you'll be able to go through this later on and see exactly what I'm talking about. But you should make it easier. I will when we're doing live streams on YouTube right now. I'm keeping myself close to the marketplace. That way I'm not rusty doing it live in front of you. Does it want to expand higher quickly too on this candle or the very next candle, preferably this one here? I'd like to see it really aggressively run up and take out the low of the candle at 855. That would be going through the full fair value gap that was formed on the 850 time 5-minute candle. So that big green candle at 850. I'm watching to see if the present candle that we're forming on a 5-minute chart, does it have the energy and the momentum to carry us all the way through the gap that's been formed? Because if you look at what's going on here, we have a candle at 910 on a 5-minute chart on ES or US 500. We have a candle at 910 and then the candle at 850. Both of those candles are one single pass. The 850 candle is a one single pass up. Then we have one single pass going down at 910. So that being a potential to be a balanced price range. If it rejects this and can't climb through it, and if it stifles any movement higher, that really increases the likelihood of us running down to the lows that were formed on 830. So quickly you can see how there's a whole lot of this type of balancing and measuring and seeing what you should be doing. And that's why it's very challenging as a developing student, because you don't even know what you're supposed to be considering as important. You're just looking for, give me an order block or a fair value gap to trade on. There's so many things that has to be weighed out and decided. And that's why I have a great deal of respect for people that live stream, because not only are they doing all those things that make up the decision process of following their model, whatever it is, they also have to know that the outcome of whatever they're doing is going to be judged harshly, even by the folks that supposedly support them. They know in their heart of hearts that that's going to be impactful to them because they look at you as a hero. Okay. And here I am. I'm not trying to be a hero. I'm just teaching you how to reprice. So far, we're about halfway in to that gap. So using the order block at 840 and targeting the top of the fair value gap that was formed at the 850 candle, that would be a very low hanging fruit objective for a beginning trader paper trading, or not even paper trading, but like tape reading. So if it were to touch the top of the fair value gap or the low of the very specific candle at 8:55 time, you want to screenshot that, and that's more than 5 handles. That's plenty to do well as a beginning student. And you're just watching how price gravitates from one level to the next, expecting it to do certain things and behave a certain way, and certain things not manifest itself in price. Now, we don't want to see a trade below and through with the energy, like a lot of excitement below 39.97 and a quarter, or the high formed on the 9:15 candle. Everything's still on a 5-minute chart. Still on a Now, we don't want to see a trade below and through with the energy, like a lot of excitement below 39.97 and a quarter, or the high formed on the 9:15 candle. Everything's still on a 5-minute chart. That's like it's talking. Feed me ICT. All right, 2.5 minutes to the opening bell at 9:30. Give me that pants on. No, the next one over there. Yeah. So far, we're just consolidating inside that fair value gap. A 50s candle and a 9/10s candle. So if it moves energetically below 39.97 and a quarter and goes back into that order block that was formed that we've been monitoring at 840's down close candle, that would indicate that we're inside of a balanced price range. And then we could use that information going into 930. So far, we've not shown any kind of energetic move below 39.97 and a quarter. It's just retested it and we're back in the middle of the gap. But all things being equal, and this assume that this is not a CPI number day. Okay, we're not in that climate, if you will. The outline that we're looking at here, that would have been a long entry for me at the order block dropping down, and I would look for a run above 40.20, accelerating into 40.30, and that's what I would look for. But because we're not in that, we're in CPI data release, and at 9:30 is opening in less than 11 seconds. We have to just paper or tape read it. I have not pushed the button. I promise you, you're not going to get a dose. This is the dose. Very, very difficult read. Getting another touch of the 39.97 and a quarter below the fair value gap, which is the high of the candle at 845 candle. Notice there's a lack of an energy right now. Usually when we have the opening bell, it's a lot of a rush to do something, a lot of volatility. We're not seeing that yet. Okay, leaving the fair value gap and took out the low of the 925 candle. Still would like to see it expand aggressively higher. So the question is when you're looking at this as a new student or someone that's maybe a break-even trader, and you're just looking for a way to determine when the market looks like it's going to do something. Like, what is a market that's poised to do something with a high degree of probability? You're not seeing that here today. Okay. And that's one of the benefits of being in an environment like this, being, I guess, coached through it, because there's so many factors that would otherwise lead to you losing money by not knowing this, by not being able to recognize, choppy, uncertain conditions. Right, came back down into the high of the candle at 840. So 840's candle, time wise, we're trading into that again. All right, so we have evidence that that's a balanced price range now at the range that we've outlined as a fair value gap. So your attention should turn to the low that's just been taken out at 915. Okay, we're going to treat that as a potential short-term shift in market structure. And I'm drawing a line out from that to the right. That's usually that orange line. I usually put like the little light bulb icon on my chart. And I'm dropping down into a 1 minute chart now. So you should have a line drawn from the right on the 918 low. And we're bouncing up into what could potentially be a fair value gap formed on the candle at 932 on a 1 minute chart. We've just stabbed up into it. And you should have your level drawn at the 830 low. That price should be, for ES, it should be 39.54 even. Okay, and then you would hypothetically in your mind say, okay, we're inside, we went up into the high of the 933 candle. That would be enough by poking into that. That's enough for a short. You want to watch, does it gravitate with a lot of energy to get below the 844 low and the 840 low? That would be first potential profit or partial. That's how you would look at it like that. I have not pushed the button. there's no trade. I'm not going to do any trades today. Okay, if I trade anything, it'll be in the PM session. Tape reading this, you want to have the little trend line segment. Draw a trend line from the high of your 933 candle. Drag that out to the right. Okay, and you can see how we went up into that high just by a little bit on the 934 time candle. And then we're all on a 1 minute chart right now. You're not trying to place a trade. You don't need to worry about a stop right now. All you're doing is you're reading it. Does it show these signatures? Does it want to move and gyrate? You're all thinking, okay, if that's an entry, where will my stop loss be? It's not a trade. I'm teaching you how to read the tape. Until you can start doing this, you can't figure out where to put a stop loss. You won't be able to go in the right way. You won't be able to know what the market's going to do. There's stages in this development. You have to go through the right process. Every single one of my failed students, every single one of them do the same thing over and over again. They rush to try to get into a trade. They want to make money right away, and they're not prepared to do it. They haven't properly learned how to trust what it is that you're going to be trying to put money behind. Get your screen capture ready. I don't want to see the open on the candle at 935 be breached. Okay, that small little up candle, it can retouch that or retrade back up into it. But I want to see it preferably leave a small little gap on the candle that was formed at 936. Between the candle at 935 and the present candle we're in right now, I want to see that small little area stay open. It can trade back up there, it's fine, but I'd prefer to see a small little piece left open and then go down below the low at 840. But we have now traded back up to that up close candle. Very, very small, shallow sell side liquidity pool resting below the low at 840. I want to see now this candle with the very next candle, real sudden drop below it. And if it does that, you want to screen capture it as it does that. Remember I was saying you weren't ready to take a trade? Some of you are like, I'm glad I didn't take a trade. Now you want to take your rectangle, and from the low on the 931 candle to the 933 candle, drag that rectangle out in time. Drag it out to like 950 time wise. Okay. Price could go back up into that. Okay. And which is the reason why I didn't discuss anything about a stop loss, because you can go in and use the high on the 933 candle as your entry. On the 934 candle, when it poked above 933's high, that's an institutional order flow entry drill. 5 handles were offered on that run lower, and it need not do what? It need not go to the low at 840. But notice what it did reach below. Look at the closing price at 844. Just for a moment, you're not going to keep this on there, but just for a moment, drag the line I told you to anchor from 840's low, drag that little horizontal ray or trend line or whatever you want to use it, drag it up to the closing price at 844. That's a rejection block. So does it offer from running out the high on the 933 high on a 1 minute chart? It runs above it, and then that would be your short. Does it offer 5 handles to get down to that rejection block? Because that would be your next discount array. Yes, it's done it beautifully. And it didn't need to take out the wick low at 840. And now what is the price doing? It's just meandering around between the rejection block and the low formed at 918. So we would prefer to see it expand once more and aggressively attack the liquidity resting below the 844 low. So put your line back on that 844 low. We would want to see that. If it were to trade back up into the fair value gap that is outlined for you based on the 932 candle, I would use that as a totally new partial going into the idea that we could still run the 39.76 and a quarters low. All right, so now watch how this next candle should be popping lower. Five handles, folks. I know it sounds like it's not sexy, ICT. I'm going to do 100 handles like you do. I started like this. I started just like this. Small little incremental moves. And they build. And then you start seeing more 5 handle moves, and then they become 10. And there you go, screenshot that. Another cherry pick. Picking cherries, real time. Be sure to tip your waitress. I'll be here all week. And that's it. You'd move to the sidelines and you're done. You had several handles offered to you in tape reading, outlined it real time with you, walked you through it, every single individual candle. Okay. No yin and yang symbols needed. Okay. None of the nonsense. It's real time algorithmic price delivery. That's all it is. Now, this is a sloppy day. This is very, very hard. On a difficulty scale of 1 to 100, we're at like 90. It's very hard to read this right now for me. So if I'm telling you this is hard and you can't really see the benefit of anything in price action right now, you're okay. That's fine. That's how you should feel about it. All right, now you want to take your attention to the low at 8:30. We don't want to see that range that was identified by me moments ago, the 932 candle, that fair value gap. We don't want to see that return to now. We want to treat that as a breakaway gap. And now, because we're well below the, what is this here? The 840 low on your 1 minute chart, you want to see it expand down to the rejection block, which is the closing price at the 830 candle. And that's going to be way different for US 500. And just for you guys, just use the low of 830. Okay, but for ES, the specific level is 39.67 and a quarter. We want to see it reach below that. And that would be another partial. 80% of your trade should be off at that point. I know some of you are not listening and you're in trades right now and you're flipping out because you're making money and you can't handle it. I told you not to do it. It's worse than crack. Not that I have experience with crack, but you know. Oh, ICT. All right, as soon as it cracks 39.67 and a quarter, you want to have that screenshot. You should have it typed out already on your chart. 80% comes off below that line. And then when you screen capture it, it'll be in your screen capture as it happens. And it's just really nice to have that on the weekend, looking back saying, I watched this live. I watched it really pan out right there. It was really happening in front of me. This stuff works. It's crazy. You know, it gets boring that after a while. I get excited because I see all of you get energized by it. Oops, there's that luck again. Now, your wick for ES traders, you want to take your Fibonacci and measure an anchor from the low on the 830 candle up to the closing price. That comes to 39.60 and 3/4. You want to have a line on your chart at that price. 39.60 and 3/4. You would take a partial below that and then let the rest run and see if it can take out the low at 39.54 even, or whatever your low is in US 500. Oh, it's so much different when you're doing it live, ICT. Haters are flipping out right now. He'll never do this. Yeah, wait till you see what I'm doing the rest of this year. It's closing time. Ain't nobody selling mentorships this year. Now, think about what sweet spot you would be in right now. You had two partials going long, got stopped out with the bounce. No big deal. We waited for 9:30. We waited for it to indicate what it wanted to do. We watched a very specific level. Does it act as a balanced price range? And it gave us our signature. Then we saw another imbalance and a shift in market structure where I showed you the line where it went below it. I mapped out where the imbalance would be. If it traded up into that, that would be using that as an entry that was on the candle at 934. Okay. One of the things that you're going to have to learn to just submit to is the process of time being in a trade. It's altogether something different. Like when you watch my recordings and I'm executing, It's entertaining. It's great. Sometimes I use great music. Sometimes it's probably not your genre. It's fine. It's just for me, not for you. But that element of watching how fast it goes to the targets and where I'm peeling off profit partials, that unfortunately can trick you into thinking that that's how fast it should feel for you in a trade. And that was one of the worst growing pains for me as a trader, because being in a profitable trade and I haven't taken anything out, that feels like forever if I'm just holding for my terminus target, my ultimate target. In this case would be the low of the day at 8:30. This point here, we're trading at a level where 80% of the trade's already off, hypothetically. So you're in profit 80%. It doesn't matter. Okay. Listen, write this down in your journal. It does not even matter if 8:30's low is taken out or not. See, that transaction is about being right. Right is not profitable. Profitable is profitable. So we're looking for ways to take things out of the marketplace where it makes sense to do so, where there is liquidity, where there's a reason for the market to be repriced to. What's the basis for price even going to these levels? That's what I walked you through this morning. That was the narrative. You're not seeing that with other people out there. You're just seeing them show you results on an MT4, or they're doing lots of trades and going to full max loss and not using stop losses. So there is a degree of mastery that you will grow into, but you start here and you do this for weeks and months. And then you learn how you're going to interpret price. How has it felt for you to watch this? As it was melting down, respecting the levels I'm calling out and showing you very minute candles, telling you what it should do, what it should not do. How did that feel watching that? Did you feel anxious? Did you feel comforted because I'm talking about it? Did you want to fade it? I guarantee you, trolls are out there trying to do the opposite because they were hoping I was doing it wrong, so they can go, look what ICT did today, but I did the opposite. You got your ass wrecked today. But feelings watching this real time, you have to really pay attention to that. In your journal, you should be doing the most of that today. So after we close our session, you want to go to your journal while it's fresh in your mind. What did you feel? And be honest with yourself. This is the moment where you have to be honest with the observations of you as a trader, feeling what it felt like to watch the price deliver algorithmically, not retail logic. Nothing in this is retail. There was nothing in here from Chris Laurie, nothing supply and demand, nothing Elliott Wave, nothing like that, nothing harmonic. It's just simple algorithmic time and price. You want to screenshot this right now. There you go. So now you'd only have less than 10%, maybe 10% of your original position short from 934. So it's been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. It's been 16 minutes and you made more than you earned in your job's weekly salary if you've been working with one contract. Now, I'm taking a great deal of liberty because most people don't make that much money in the United States. And I know some of you are probably doing some high dollar stuff, but you should be 90% out of your trade. And at a point where the stop would roll to, I would hypothetically have my stop at 39.72 and a half. Why that? Because it's just above the fair value gap that's formed at the 944 candle. So it would be above that. And if it comes back and stops me, that's fine. I wouldn't want to be in it any longer. So many people falling in love today. I don't know where this guy came from, but I love him. I love him. Oh, I got so much stuff this year. You have no idea where I'm taking you this year. I'm actually falling in love with live streaming. Like, start doing it every day. Shut everybody down. Do it, ICT. Do it. All right, now think about what you feel right now. If you had 90% off on your trade, 90% off, how would you feel about that retracement so far? You don't give a shit because you're banked 90% and you're not basing your trading on the transaction of being right or wrong. Right or wrong has no basis for profitability. None, has absolutely nothing to do with it. Now, draw out your rectangle on the candle at 944. You're going to go to the 943 candles low, drag it to the 945 candles high, okay, and then drag that out in time. I'm watching that level there. It should not go above that. If it does, we're done for the morning. So I would roll my stop to, come on, this thing. I'm holding the phone in my hand and I'm trying to drag my finger across my laptops. I don't have a mouse on this because I use everything on a laptop in case someone hacks or tries to do something while I'm connected to the accounts that I don't trade with my live account. Everything through TradingView. When I'm sharing it with you, it's all through a laptop. I would have my stop at 39.69 and a half. So if it went there, I'd be content with being knocked out there and it's fine. I don't care. And you shouldn't care either if you were in a trade, but I would want to see it, drop lower from here because we already had that candle return back to that fair value gap that is mapped out for you at 951. And you want to have 100% of your trade off if it goes below the 830 low, and don't care how much it goes beyond that. You don't care because all of your uh, fear, anxiety, performance issues are all going to come initially with being right or wrong. And I'm trying to train you not to think like that. Okay. Don't think that way. You got to find a way to get in here, find a position to go in that has a measurable risk that's palatable for you. What does that mean? Can you take that trade? Can you afford to be in that trade based on the amount of movement that it could potentially put you through? And some trades are not going to be feasible for some of you. There's some trades that I won't even take because it doesn't make sense to do it. I'll just wait for something else. All the liquidity resting below that low right now is flashing like like a neon sign. Come down here. I want to sell to you. I'll sell it to you below the low at 830 at 39.54. Below there, there's real orders below that. Now you want to take that up candle at 951. Okay. At 951, I'm watching the middle of that candle. That's mean threshold. In my mind, I'm watching that thinking, I don't want to see price go above that. I want to see everything that it prints. I want to see it stay below the middle of that candle. We'll just call it roughly 39.63 even. I'm not rolling my stop to that. I'm just watching it. Does it want to go back to that and throw it? If it does, if it trades like through 39.63, then I would at that point save my stop loss and close the trade and be content with it and not worrying about whether I got right or wrong about going below that low. But as long as it stays below that 951 candles middle point, then I would look at this as it's still likely to take out the sell side liquidity below 830's low, and I'd be content with holding it. But a run through, like it tries to run through 39.63 or the middle of the 951 time candle on a 1 minute chart, you're watching it. If it were to do that, then I would collapse the trade and save my stop loss and not worry about anything and just go home. not regret if it just tanks. It could drop to 3,100 even after that. After that's it. I would close the trade right there. I would collapse it, and I would not care at all whether it goes to hell or if it rips higher. Where do I stop? Because I wouldn't be in the market now. I'd be done. Now think. Take a moment for a second. I'm not going to say anything. I want you to just think about what you just watched. Was that real enough for you? Was it real enough for you? Every single candle, every single one of them, outlining why it should do this or that, what it shouldn't do. If it was hard for you to follow along, I know it'll be easier when you're watching me with a chart. But understand that everything that I do is perfectly calculated. There's a measurement behind everything I'm doing. There's a there's a process. Okay. There's no safety net out here. I don't know how many people are listening to me and how many people are going to watch this later on, but I can't edit this and I can't paint those candles on your chart. That happens from the market. But you just had the entire morning session outlined to you. What I would do, what I would not want to see happen, how I would engage, where my stop loss would be, where would my partials be. It's exactly what you watch me execute on through TradingView with live data. That's not cherry picked as much as these assholes want it to be. It's not. And I'm going to be breaking all kinds of hearts all year long. I hope you're here for it. I hope you're here for it.